And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell with a global simulcast. Carol Massar and Tim Stenovec join us. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership here with YouTube. And welcome back, Tim Stenovec, from your Florida vacation.
Oh, yeah.
You missed a lot.
It was quite the vacation.
You don't look tan, Tim.
Yeah. Well, if I don't look tan, it's because I wasn't outside much, so.
No, okay.
That's not what I saw.
That's kind of, the whole point of being in Florida.
You look like
Our
you were
set was outside, but it was so, I'm not kidding, it was so hot that between interviews, I would go inside to the air conditioning.
Wow,
Sweet.
that tracks.
Yeah.
It was at like 9 in the morning, the humidity. Yeah.
That's the thing.
It's never the heat, right?
You move to Florida for the taxes, but then you have to deal with the weather.
All right,
All right,
maybe
guys.
we'll talk a little bit about that later.
Yeah, maybe.
All right, we're watching a trade, little changed overall, certainly on the S&P and the NASDAQ 100. We just caught up with our own Bailey Lipschultz, talked a lot about the markets here, just saying no real conviction in terms of volume right now in the trade that we are seeing. And I think it's safe to say investors are just trying to figure out, what do I do? When does this war end? I need some kind of timeline to really figure out what's my strategy going forward.
That's reflected in commodity prices. I mean, WTI below $90, but still up more than 5.5% today, Katie. Brent up more than 5.2% today, 92.40 is where it is. Both of those up more than 50% year to date.
Yeah, I have to say, while you were in Florida, you missed a lot of volatility in the oil market. I mean, just breathtaking. And it feels like that is the asset class that all other asset classes have been keying off of.
And I do want to point out all these asset classes, with the exception of bonds, all sort of oscillated between red and green on the day. And I think it gets to your point, Tim, about this idea of a lot of investors really just not knowing exactly what direction we go from here. That is true for all of the major indices, which spent time in the red and spent time in the green. As for the closing bells, the Dow will finish in the red, down almost 300 points, or 0.6%. The S&P will finish in the red, down 6 points, or about 0.1%. The NASDAQ composite, that will finish in the green, up about 0.1%, and the Russell 2000 in the red, down about 0.2%.
All right, quick check on the S&P 500, guys. Most names in the index lower for the Wednesday trade. 331 losing ground today. Katie, 170 to the upside, 2 unchanged.
Let's take a look at the sector level as illustrated by the circle here. An interesting makeup. Energy was your biggest outperformer when it comes to percentage gains, up about 2.5%. Tech participating as well, higher by about 0.4%. To the downside, though, consumer staples down about 1.3%. Real estate, financials also lower, but 8 out of 11 sectors in the red today, Carol.
All right, let me get to some of my gainers here. I was kind of changing.
Did you have to do some late last minute updates,
Finley, our producer, gets an award because I was moving stuff around a lot, so she is a gem. I want to go to Oracle. Let's start there because your number 2 gainer in the S&P 500. They reported, as we all know, earnings after the close yesterday. We were all breaking them down. Stock soaring, finishing off its best levels of the session, but still up about 0.9% here. Strong AI cloud sales, fiscal year outlook suggesting little let up in demand for AI compute, if you will, and AI related spending. And I will say that that was higher than expected. Oracle did maintain its capital spending, which, as I said, was higher than expected for the quarter, but it maintained it for its fiscal year forecast. $50 billion is what it laid out, and that seemed to be pleasing to investors. So again, keep in mind, stock down about 14% year to date, down roughly 50% from its high in September 10th of last year. Let's go to Sable Offshore. This was kind of a late ad. Thank you, President Trump. Ticker is SOC. President Trump getting ready or said to be preparing to invoke a Cold War era power to pave the way for renewed oil production off the southern coast of California. And this is the Sable Offshore company looking to restart significant production from a cluster, I should say, of offshore platforms in California. So this one halted in trading earlier, up as much as 33% in today's trade, finishing the day with a gain of about 15%. Go on over to CF Industries, ticker is CF, and this one also on a tear today, and you can see it's up about 9% here, up more than 50% year to date, on track. I believe this might be a record close for this one. Agricultural chemical companies, so we're talking about fertilizers. We've seen them rise as a result of what's going on in the Middle East and the U.S. war in Iran. It's impacting nitrogen, phosphate supplies, raising prices. Keep in mind that Saudi Arabia supplies about 15 to 20% of the global trade all through the Strait of Hormuz, according to a recent note from Scotiabank. So these companies, as a result of all of this, maybe supplies are going to be impacted, and so you're seeing higher prices potentially for these areas. And I got to mention Caesars, if I can, just real quickly. Again, a late ad, up about 12%. This, as billionaire Tillman Fertitta in exclusive talks to buy the company for about $7 billion. We're talking about $34 a share. And you can see the stock closing just below $30 a share. This would top a competing bid from Carl Icahn, and this is all according to the Wall Street Journal, citing people familiar. So, Finley, thank you again for the change.
All right, let's talk about some of the stocks
Appreciate the host.
That was a lot. I was so afraid you're going to be like, oh, wait, but we got to do an honorable mention. So I was changing.
You just have to always have an honorable mention ready, Romaine.
No.
Thank you, Tim.
Yeah.
Welcome back.
I know her well. I want to start with the alternative asset managers, starting with Ares and KKR. Ares fell today by 4.8%. KKR fell by 3.2%. This, as JP Morgan Chase is said to be restricting some lending to private credit funds. The move adds to already weak sentiment surrounding alternative asset managers after weeks of stock sell-offs. Blue Owl, I was looking down more than 60% from last year's highs. Pretty remarkable. Also, looking at shares of Stryker today, they fell on the day today after a cyber attack against the company crippled the company's global operations. This, according to a person familiar with the matter, and a memo seen by Bloomberg News. Stryker shares fell by 3.6%. The pro-Iranian digital activist group Handala has claimed credit for the incident, and many Stryker employees around the world are unable to work and have been sent home from offices. Stryker has stated that it is experiencing a global network disruption to its Microsoft environment as a result of the cyber attack, and its teams are working to understand the impact of the attack on its system. And finally, how about Campbell's Soup? Shares falling today, down by 7%. The company cut its profit outlook to the lowest in a decade. Consumers are moving away from chips and pretzels. Supply constraints are weighing on sales of freshly baked goods. Snacks division Romaine missed expectations in the second fiscal quarter. And we got some earnings still.
Yeah, let's go to Petco. Ticker Wolf. The share is up 15% in the after-hours trade. The earnings just crossing the wire. Adjusted EBITDA in the most recent quarter does look like it was a beat. Net sales relatively in line with expectations at about $1.52 billion. And here's your forecast. The company says that for the full year, expect adjusted EBITDA in a range of $415 to $430 million. That's well above what the street was looking for at about $404. A lot of that, though, does appear to be back-weighted toward the second half of the year, as they do give a first quarter adjusted EBITDA number that is higher than what the street was looking for, but only by a couple $1 million.
What's that ticker, Romaine?
WOOF, for all you dog lovers.
Wait, how do you say it?
Meow.
That's for Katie.
Anyway, yeah, that's for Katie there, for the cat lover here, on the one cat lover here on the program. We forgive her. We just want to check in real quick on yields here, because we did actually continue to see a meaningful move higher, particularly on the long end of the curve, with your 20-year and your 30-year yield up by about 8 basis points on the day. So the sell-off in that space does continue. On the shorter end of the curve, up about 5 basis points here. That is a setup heading into a Fed decision day 1 week from today.
All right, everybody, let's get to some stories on our radar. Maybe not such a great Batman, but maybe he's better at doing deals. I'm talking about Ben Affleck.
Was he not looked at as a good Batman?
No, Tim.
No, he was not.
Okay. Even he knows that.
Whatever.
So Netflix is going to pay as much as $600 million for Ben Affleck's AI firm. It is called Interpositive. It's an AI movie-making company, Tim.
It's cheaper than a $72 billion pursuit of Warner Brothers. But it raises the question about Hollywood and AI. This is really interesting because, as we know, workers in Hollywood are worried that studios will use AI to eliminate jobs. But this company, Interpositive is what it's called, the director needs to shoot a movie before the software can train using the footage. Only then can it help remove stray items or adjust the background in a scene. It doesn't train on films without permission or generate new projects without the base film.
So it cleans up stuff?
Cleans up. But that's still, I would imagine that still does do things that have been done manually in the past, or that people have done in the past. So
yeah, I'd like to see a film actually produced by this company, though I will say, I mean, it is...
David Fincher has been using it in an upcoming Brad Pitt film.
upcoming Brad Pitt film.
Yeah.
So there
Is
you
this
go.
like Fight
Put that
Club
on your
2?
schedule.
What is this?
I don't know what
That's
the
it?
film is.
Wow.
But Brad Pitt is in it.
Yeah.
Did somebody say Brad Pitt? Sorry.
Brad Pitt.
I just got a little flustered there. No, I'm just kidding.
Okay.
What was that
Family show
ticker,
here,
Romaine?
Carol.
What was that ticker?